All right. Good afternoon, everybody. Welcome to the webinar. I'm Dan Sheridan with my buddy Troy here, and I'm going to talk a little bit about the market this week, kind of what worked, and then go over a plan for at least what I'm tentatively looking at for a plan for next week's trades. And then I'll hand the ball over to Troy and is going to go over some of kind of a favorite back test of his, and he'll show you a couple things. So welcome, everybody. Maybe we'll give just a couple more seconds if folk are coming in, and if you have any questions for us, let us know, but I will dive in here. All right, if you can see my SPX, okay, and as you look at the market, it's been an interesting market, even without the, quite a bit of news this week with the tech earnings and some inflation news, create quite a powder keg of the market. For those who look at the expected range for this week, if you look at the close of last Friday, we closed at 49.67, just to give you an idea. And the expected move for this week from Friday to Friday was about 96 points. That just means that's one standard deviation. There's a 68% probability we're going to finish up or down 96 points from where we closed last Friday. So that would give you an expected range of 48.71 to 50.63. And at the moment, it's my first time on live stream here, or that we're going through it. Troy, if I see questions, let me see if we see. Will you see questions?
I don't get to see questions, but I'll jump in on YouTube as well and try to answer them.
Okay, I don't see, or maybe if I was supposed to click something for questions, but we'll have to see. But anyways, the expected move is 48.71 to 50.63. Right now, as we stand, we're 51.08. So, the trend for about 9 of 10 weeks was we finished in the expected move. And the last 2-3 weeks, if things got a little spicier, we're actually on par to finish outside the expected range. And as you look this week, that when you look at the range between the high and the low of SPX every day, we had a couple 60s. Monday, the range between the high and the low of SPX was 69. And then yesterday, another big one, March 25th, yesterday, wait a second, April 25th, I'm sorry. We had a 67-point range. So for range-bound traders, it's been a doozy. But, the last 2 weeks have been pretty good. Obviously, you've had to kind of tightrope around some of the news events and stuff. But this week, putting on some butterflies worked well. Monday, we put on a double strategy, of which I will bring another example of that. Got off in a couple days. The butterflies, he had to make an adjustment, but nothing really was down more than 4%, and that would have been adjusted, and the others were winners. So I'll go over the plan for next week. The big thing next week is the Fed meeting, which is Wednesday. Based on where the market is, something can happen, but it seems like almost 100% that he's not going to do anything. He's not going to lower it. And so, we'll see. I don't have any big opinion that we're going to move a lot, but, we've had some pretty good moves with this week. Today was a gap of almost 40 points with news related, and we're up 60. And so is the thing like, Dan, I'm scared of range bound trades. We've had these big gaps. No, it's just be aware of the events. I mean, if you look at the last year, Troy, or year and a half, out of the 14 biggest gaps in the market, you could tie 75% of them to a news event. So it just, do you have to be aware and be responsible? Yeah. So let's dive in. So tentatively, and I'm only bringing this up because I think it's good to have a plan, right? Because I know if we don't have a plan in our daily life, we're going to do nothing, right? We'll just eat the potato chips. As Troy said, it's raining out here. And he said, hey, it'd be good to just sleep, maybe have a few potato chips and sleep. But so here's what I'm tentatively looking to do on Monday. Monday, I'm looking to do a 4 or an 11-day combo. Here's an example of a 4-day combo. This is pretty similar to what I did this week. And this in a couple days was up 10%. So just give you an idea. These are the expirations that I'm looking to do. A May 6th 3 calendar. And I'm looking to go maybe from the current market conditions, looking to go down about 50 points on the put side. So it'd be a calendar at the 5160. And then I'm looking to do a 25 wide butterfly centered at 5160. And again, these are the exact expirations I'll use on Monday. And Monday, it'll be 4 days from expiration. So the calendar will be about $2.65. The butterfly, $2.60. So it'd be about $520 for a trade. If I was doing a 10K, just to give you a perspective, portfolio, just to give you an example on the sizing and leaving nothing for cash, but I would probably do 4 combos. And that would be their 4,520 for the combo. So I'm allocating 2,000 to the combo. Usually on shorter duration trades, you're going to use less capital. So that's the combo. So what I like about these combos, if you put it on here at around 5110, the purple line is your graph today, the blue is at expiration. You have a ton of room on these things. You have really good theta, and you're neutralizing the vega relatively. So that makes it a powerful combination. And Troy, if you see any questions, let me just see if one of these buttons.
Yeah, they can't see what you're writing, so the annotation doesn't show up for you. So you'll have to move it around and describe what you're writing a little bit.
Oh, can you see my cursor, folks?
Yep.
So cursor you can see. Okay, so I was just saying SPX is around the 5110 area. So on the butterfly, I'd be setting up Monday. I'd be looking to go 50 points up, set the short, wherever the SPX is Monday morning, 50 points up, and make the butterfly 25 wide. On the downside, go 50 down from where we're at 5160. And since this is just giving you some more of a hypothetical, if this is a 10K portfolio, I just have one contract here, I might put $2,000 into this trade. So I have 4 combos. If it's $520 each times 4, be about $2,000. And what I'm trying to achieve with let me get through with it, and then I'll tell you just one point on diversification, then I'll hand the ball to Troy. Tuesday, I'm looking to do a butterfly. This would be the expiration. I'd be looking at May 24, but I'd be looking to do it on Tuesday. So generally on the butterflies, 3 to 4 weeks out, I would look. And this is on the call side. And so what I'm looking to do is put my short strike at 5110, go 70 down, 5040, and 65 up, 5175. And that's I would call that an unbalanced butterfly. I give it a name just because I like the name of it. Sherman tank, right? It's a very powerful butterfly, especially as the VIX is over 16, 17 area. It's It's really strong on the downside, but it works great on the upside because when the VIX is higher, 16, 17, 18, and we go up, you'll get some volatility help on the butterfly because as SPX goes up, the volatility goes down. Right now, it's a little under a delta short, so I will, at game decision time on Tuesday, I will look to see if VIX is over. If VIX is 14 to 15, I would probably do this 70. My long 50-40, 51-10. My long up here would be 60 up from the short strike, 51.70. If VIX is probably upper 15s or higher, I will go with the Sherman tank. And that's a 70-65, and those work really, really well. And that would be
you said the class, you do those classes on 2 o'clock, right? Someone was asking on Monday what time. 2 p.m.
Yeah,
Eastern.
Monday the combo is at 2 p.m. Yeah, so there's a lot. We have a morning class and an afternoon. The morning class is at 9:50 Eastern, goes about an hour, and we cover a lot of ground. We look at the news, make a plan for the week, look at live trades we're going to do, look at other people if they have trades they want to look at, they're in trouble. We look at that. And then the 2 p.m. class, there's a class. We're running live classes each week, and they may change month to month, but right now at Monday at 2 p.m. Eastern, we're focusing on the combo, and at every 2 p.m. class, we do a live trade and follow it through. Tuesday will be similar to our 10K or 3K 10% classes. We're just labeling it strategies with the market near all-time highs. Wednesday, a focus on managed trades by the Greeks, really understanding the Greeks. And then Thursday, short-term iron condor. So we're going into the third week of this. And then each month, some classes will just continue. I think managed by the Greeks will continue because that's a process, takes a little bit of time to understand. But I think market conditions and stuff will determine which classes we do each month. But the butterfly, and again, on a 10K portfolio, on a 4-day or an 8-day trade, I might put $2,000. And then the 15 to 30-day trades, I would put $4,000 each. So you have 3 trades. So I'm trying to diversify. One, I put them on, so you diversify your price risk, diversify strategy. Some strategies that benefit if volatility goes down, some strategies that benefit if volatility goes up. And so different, I have a calendar of a butterfly, diversify there. I'm diversifying the duration, shorter duration, a little bit longer. And then I'm diversifying. Some trades maybe do a little bit better on the upside, some a little bit better on the downside. So I'm just putting all the ingredients to give something that is more balanced, but I'm not putting all the trades on at the same day. So like usually a Monday, Tuesday, Thursday. So Tuesday is generally the butterfly. Now, obviously market conditions will determine that. And you'll see in the classes, we may make some tweaks depending on what's the market doing. And then the last trade would be the 15-day calendar, which it'd be a 15-day calendar on next Thursday. I'd be doing May 22, May 17, 5 days between the long and the short, put the short right at the money like that. And all of these trades, we're looking at turn them over within the week. I expect to be in the combo trade maybe 2 days, the calendar 3 or 4, and the butterfly 4 to 5 max. So you're looking, if you're trading a 10K portfolio, you're looking to turn that over every week. So that's kind of the plan for next week. Obviously, how the market acts on Monday, if there's a day, Troy, that we're up 1.5%, at 10 in the morning, probably not a great range bound day. But I think when you do some of the diversification that I've talked about here, the last 2 weeks have been, pretty good for the range bound trades that we've been doing in the class. And part of it is because you're diversifying a little bit. You're kind of delicately walking through the landmines. And I think you had 3 landmines in the last week or two with with range-bound trades. You've had news, quite a bit of news coming up. You had all these tech earnings, but bigger than any of them, the SPX price chart is stinky, right? I mean, we were getting hammered, then we came up. I mean, in the last 2 weeks, it was like, if you said one word to describe the market the last 2 weeks, whipsaw, right? Down 200, up 150, down 100, up 100. So, you have to navigate gingerly. So that's my 2 cents of at least what I'm looking at next week. Troy, I will hand the ball over to you.
Sure thing. Yeah, I appreciate it. Yeah, and if you don't mind sharing my screen, Dan.
Oh, yeah. Let me see if I can do this right. Take Dan off and see if I did that right.
Yeah, there you go.
I hit the right button.
So this is who am I? I'm Troy McNeil. I run a back tester called Option Omega. And I just so happened, Dan Sheridan is kind of my mentor, and he was one of the first guys we ever showed this to, and developed a relationship through the years and things like that. So, but wanted to show it because Dan's always looking at new stuff, and so wanted to show it off. But basically, the real quick of it is, Dan, you'll understand this. I found a trade a couple of years ago that it was a killer trade. I was going to be a zillionaire in like 2 years of trading. It was the perfect trade. And I had back tested it, and I found out through real life pain that the back tester did not match the trade. And so I set about me and a couple friends working on a back tester that's a little bit more accurate. And this is Option Omega. So what I wanted to show real quick, Dan, and just kind of go through how it works and then go from there. So basically the test, you can test a couple different things. So you can test SPX, SPY, IWM, Qs, Apple, and Tesla. And we go back to 2013, and it's a 1 minute interval. So we check the market every minute, basically, to see how the test is going. And you can test specific time. So you could test the COVID crash, what would have happened, and things like that. But we'll run it year to date right now. And basically how it works is you can set some strategies and change it as you go, or you can kind of build each leg. And so I was just going to show you one test, if it's all right, Dan, and just going to show you how it works. So basically what I'm doing here is year to date, I am selling a 50 delta put, 0 day, and I'm buying a put that's 25 points below that. And then I'm selling at a 1 day. And then I'm selling the call 50 delta, and I'm buying a call 25 points above that. So, Dan, I don't know what you'd call this. I don't know if it's, technically a double diagonal. I just call it like a calendarized fly, because it's almost like an iron fly, but the wings are 1 day instead of 0 day.
Yeah, and your wings are out of the money. So yeah, it would be like a more of a diagonal type, double diagonal, right?
Yeah.
Except your shorts are both the same strike, right?
Yeah. So it's kind of like a short straddle and a long strangle, but the long strangle is 1 day past the short. So
yeah,
and you can change
that. You're getting out of this as a 0 day.
Yeah, you are, and I'll show you that. But you can do it by delta, you can do it by percentage, by I want to pay $1. You can do it by strike offset, and you can allocate different. You can test your allocations. So in this case, just to play around, I'm starting with $100,000, but I'm allocating 100%. But not really. I'm gonna ever only put on 100 of these spreads. I'm never gonna put on more than 100. So let's say I do great with it. I don't want to put on 10,000 SPX 0 day spreads.
Yeah.
And for this,
why.
Yeah, I wonder why. That's right. So you can do it a couple different ways. So I'm just going to go through it. You can set up entry conditions, and so you can open it up at 9:32, just because the first 2 minutes are wonky, and so we don't let you test the first 2 minutes. Or you can do floating entry time. We don't have time to talk about that today, but it lets you get a little bit more crazy. And you can do this every day. You could do it weekly. So you want to say on Tuesdays and Thursdays. You could do monthly. So you could target like OPEX. You could say, I want to do the third Friday every month and just test a strategy there. You can use VIX. So you could say, I want a specific VIX environment I want to test some stuff in. I want to see VIX overnight moves and test that. You can do some ratio like the VIX 9-day to VIX ratio, or you can do technical indicators. See, we've got RSI and then SMA and EMA, and you can compare those if you want. You could say, I only want to sell this put spread if the 5-minute EMA is over the 10-minute EMA or something like that. In this case, of this test, what I'm testing is anytime the market opens down at all. So 0.01, basically. Anytime the market opens down at all is when I want to put this on, just to test that. You can also do intraday movement. You could say, I only want to put it down on if the market has gone up 1% or 20 points or 30 points, or if the market's moved down. So I want to test situations like we had the other day. Was it yesterday where we opened down 75 and we rally 40? That's right. I want to test that. Also got some crazy things with squeeze metrics. If you've ever looked that up, feel free to look it up. Don't have time to go through that, but it's crazy. And then you can do stuff like opening range breakout. So you can say like from 9:30 to 10:30 or 9 to 11 or whatever. If we break out of that range towards the high or the low or both, I want to put on a strategy and test like an opening range breakout strategy. You can also take these legs off at different times. So you could actually leg out of it if you wanted to, if you go through that. Again, that's a little bit more complicated. I don't have time. You can also take profit targets. So you could say, I want to take 10% and then take a 20% loss or something like that. And you can also do that by fixed profit or by a closing order. Or you could test legging out at different profit targets. So maybe you take 50% off at a 10% profit target and 50% off of it at a 25% profit target or something like that. Those are the entry conditions. And then the exit conditions are similar. You can get out early. You could get out after a specific amount of minutes. You could test that. You could get out if the VIX has rose or dropped or whatever. Same thing with technical indicators. Same thing with underlying price movement. Or you could get out with the delta. And so, for instance, if you know that like your delta, you're doing a strategy where your delta is going to be like 0 to 1, maybe -1 delta. Maybe you test exiting at a -5 delta. So the goal, like I said, is to get a lot of different stuff to test and things like that. And then, the number one thing we hear through the years is like backtesting is not realistic. And like we said before, it can be as unrealistic or as realistic as you want. And so we add a miscellaneous section we call the Punisher over here at Option Omega, because basically you can add your commissions per contract. You can add slippage. You can ignore trades where there's a wide bid-ask spread. You can target specific. So for instance, like if you're doing a strategy in Iron Condor and you want to always collect at least $1.50 or something like that, you can set the minimum, say, I'm only going to take the trade if I at least got $1.50. And then you can test some different stuff. You can test blackout days. So if you're never going to trade a 0-day Condor on FOMC day, which, personally speaking, might be a good toggle to switch sometimes, and then you can test re-entering the trade. So for instance, the Condor got stopped out. What would happen if I just immediately put on another Condor? So anyway, that's kind of the basics. So for this test, well, like I said, what we're doing is a kind of like a double diagonal, but the shorts are at the 50 delta. And so I'm going to run this real quick.
So Troy, you're selling the 0-day, you're selling every day the at the money call and put, and then you're buying 25 points away the next day out of the money option, right?
That's right.
And this is
And
entered what time every day?
9:32. And the key is you're only doing it on days when you've opened down.
Okay. And then what's the exit parameters?
Well, for this one, this is the fun part. There's no exit. This is a ride or die, as I call them. And
Right.
so you're putting it on, and and this is the beauty of it. This is obviously, you don't adjust per se. It's just testing the data. But in real life, you might definitely get out at a certain point. I mean, and I'll give you a couple examples. So your exit might be, let's say, for instance, you want to get out if the if the price moves down, or it moves up 25 points, or if it moves down 25 points, because that's where your longs would be. So we want to test that and see. So still a great trade, right? I mean, theoretically, options involve risk, but it's a great trade in the sense of now you
Troy,
have
want to go over some of the all the numbers or some of the stuff like the MAR ratio or some of the
Yeah, let's do it. So basically now you have a safe, relatively, at least you have an out. You have an exit point, and you say, I'm only going to do this when we move up or down 25 points. That's when I'm going to get out. So what we do is we give you the general P&L, based on your starting capital and things like that. We give you the CAGR, and we give you the max drawdown. And those two numbers are divisible, so you get what we call an MAR ratio. And that basically takes into account the drawdown and the CAGR. So the higher the MAR, the better the trade is. And then we give you the percentage time you won. We give you, this is an interesting one, basically how much premium you either sold or bought, and then how much you caught, how much of that premium you captured. And then we give you your starting and ending, and then we give you some averages. So we average what the per trade was, what the average winner was, what the loser was, and then your max winner and your max loser. And what this is interesting because it helps you kind of formulate trades the longer you go as you look at it. We tell you basically, since this is a 0-day trade, how many minutes you were in on average the trade. So that gives you some sort of sense of like, when would I expect, and in this case, because it's underlying price move up, underlying price move down as the exit criteria, that could be different, different times and things like that. So in this instance, for, you opened it at 9:32, the price moved up and you got out at 12:29 the same day. So a couple hours later. And then we give you your trades and the winners. Someone asked, 100%, this is a super small sample size. So you wouldn't, never put 100% of anything into anything without the data. So we can go back, we could say the last 12 months and run it. And it might be a terrible test. It might be a good test, but that's the premises. So over that time, the MAR goes down, the drawdown goes up, but we give you kind of a log to where you can see what it's looking like through time. And so now you've got 104 trades, a little bit more data to look at, and you could theoretically test this back to 2013. But the problem, of course, does anybody, can anybody guess what the problem is if you tried to run this back to 2013? With this type of trade, what the problem would be with it?
Yeah, you wouldn't have 0-day.
No, you have no 0-day. So it's just not going to work real well. So really for this type of trade, a 0-1 trade, you'd almost want to go back to the advent of the dailies. So you get May 16th, 22 was the dailies. So you could run that and see. And Dan and I, this is the problem with this is it's just addicting because you can just test it all day and run things like that. Yeah. So since the dailies, you have a much higher drawdown, a low MAR ratio. But again, the MAR ratio, I always tell people, time is the great MAR killer. like the longer you go in time, the lower your MAR, like anything in life. A strategy that works good all the time is hard. So that's part of the deal of it. But anyway, Dan, that was I wanted to show that off just because we have found it useful. And then it's fun as you go through some of your trades, especially the ones where you don't adjust stuff, that kind of set it and forget it. It's a good way to test things.
Well, and you could set a lot of parameters in there, but I think because you can you can test 3-4 years in 10 seconds, 15. And how long is it? It's pretty quick.
Yeah, it's pretty quick. We kind of pride ourselves on it. So obviously going back to 2013, it's going to take a while, but I say that usually under a minute,
Yeah.
So
well, Troy, let's just nail this just for a second. Now I'm intrigued with this strategy.
Yeah.
What were your original parameters? Let's see if we can tweak it just a little bit. So this would be a 0 day. You're selling at the money call and put, and let's just for a second take off that market has to be down. I was
wondering if you're gonna, yeah.
So, if anybody wants to add to this what they think, let's make a few tweaks so it's not going to take it on a down day. And then the other thing, I was going to put a couple more like on a profit target. Instead of holding it, yours was holding it to expiration, right?
Yeah. Yeah. Holding it to expiration, or you get out if it's moved 25 points up or down.
Okay, so this says if you did it if you just took out and did it anytime, you'd get killed on this thing. Is that what it's saying?
Exactly.
Okay,
exactly.
So there is some edge to doing it if we open down a tick or something, right?
Yeah. Yeah. And my guess is probably you get some sort of maybe a little vol pump with the 0 day on a down move, But and then the other thing you could test, because this is going back 2 years now, you could test not taking any movement. So it's just test going to the end and seeing what it would look like. So that doesn't help, right? Especially go back real quick.
What do you mean with not taking any movement? Like
just not getting out with the price movement up or down.
okay.
So that was just riding it to expiration. The other thing you can do is when you look at this stuff, as you go through the trade log, you can see here on the right your max profit and your max loss. And so what I'll do a lot of times is I'll filter by the losers, and I'll get a sense of how much profit target I got. And then I start playing around and saying, okay, well, I wonder if I got out, if it moves 25 points, but if I also got out with like a 10% profit target, because then I have the movement that'll let me out, but maybe I have the 10%, get me out even more. The win percentage should go up, and it's just a little bit, maybe a safer trade at that point. You've won, you're winning 88% of the time.
Now, what did you do you drastically changed this one?
Yeah. All I did with this basically is I added that profit target of 10% along with, so I'll either get out at a 10% profit target, or I'll get out if we move 25 points in either direction.
Okay. So having the profit target was a big deal.
Yeah. Yeah.
Okay. See, that's nice that you could examine, even if someone wasn't terribly experienced at options, you could examine the trade log, right? So that I like the fact that it gives you the trade log, so you can kind of go look at the winners and losers and make little tweaks. And I think it gives you, a good quick way to give you a strategy that you can start with. And then once you trade it live 20 times or 30, then you get the live experience. You can tweak it a little bit more. But yeah,
That's one thing else as I show you. You can go through the individual trade and you can see. So for instance, like this was a loser. This was April 3rd. But if I hit show trade replay, it'll show me the trade price and then the VIX along with the underlying. And what's interesting is this is it actually rode the trade price and the underlying were very similar through the day. And so that just shows me, we moved up. And in that case, we moved up almost too soon.
Yeah.
Where that 0 day still had a lot of premium in it.
Yeah.
It just got knocked out.
Troy, what if you tweaked it? So basically on this strategy, you have it, if you get 10%, you're out. And what was the average winner at 10%?
10% winner is $59, $59.
So what if you made it, and that's 10% of the credit, right?
That's right. Yeah, 10% of the credit.
So what if you made it, because I'm used to looking at the margin, what if you made it 30%?
Sure.
30% of the credit, but make the max, instead of up 25, make it up 30.
Okay.
And see if that makes it worse or better.
Sure. So for quick eyeballing, that's a 5.3 MAR. And then we're going to go 30 points here and see how that does.
Okay. So MAR is kind of
it's just the quickest way to just see what's happening.
So you took the credit from, so we took it from 10% profit target, which is 10% of the credit, to 30%. And we took the exit at 30-point move in the SPX from where you put it on, up or down, right?
Mm-hmm.
Okay, so this took the MAR up a little bit, 5.3 to 5.7.
Yeah. Yeah. So it made it better.
Now, what would you, and it took the average winner up to 154.
Yeah.
Let's just see, we can give, all right, based on what we did, let's see if we can, what can we do as a group here for those watching to get the MAR over 6? Let's see what we, again, we're selling an at the money caller put. When's the entry in this, Troy? When are we putting it on?
932. So first thing available, basically.
All right,
let
let's tweak that a little bit. What if we put it on instead of 932? Is that Eastern?
Eastern, yeah, market time.
All right, let's go to, so we want to get the MAR up to 6. Let's take it, instead of 932, let's go 1045. Let's do our entry at 1045. Let's see if that takes the MAR up or down.
See, I'm interested on that 0 day, how that'll work, because see the premium.
Oh, wow, it sunk it. Wow.
Yeah, the premium.
I would have thought it would have been better for the market to kind of digest itself. So this is saying coming right away.
Yeah, and I think especially because of that gap down little clause we have, you almost want to sell that little pop. You want to sell like that little pop and vol.
Okay, so this is with the gap down again.
Yeah.
All right, do me a favor.
Yeah.
Now you got me going here, Troy. Take the gap down out, right?
Yep.
Take the gap down out, and now we have 30% of the credit. Our max loss is 30 points up or down, right?
Yeah.
All right, now let's run it.
And this is at 932, and then we'll try the 1045 again.
Yeah. Is this for a year?
This is going back to the daily, so this is a 2-year, basically.
Okay, 2 year. And so what was the MAR before?
I think we had the highest we got was 5.7.
Okay, so this took it. So the fact that it's doing this on, you want it, the opening prints, you want it down, right?
Yeah.
That's interesting. I mean, it's
when you think about 0 day, and that's a lot of people in our community. It's a 0 day community. There's definitely people doing longer term stuff, but there's tons of 0 day traders. Man, especially like those premiums, sometimes they're just like, they're just like the wind. They just come and go. Those 0-day premium, especially on a day when there's not doing anything. So,
well, right. So the MAR. My hope was before we were ended, we could get the MAR ratio over 6.
well,
Is there anybody, any suggestions that they think they could get the MAR over 6? How could we?
Two things, Christian. Some of Dan's flies, they're harder on here because he adjusts, and that's infinitely more complex, and it requires a lot of discernment and things like that. So we don't do adjustments in that way. Some of the trades Dan does, you can test, and we've looked at those before. Some of them you can't. So you kind of just, it depends on the strategy, really. If there's an adjustment made, it's harder to test that. But the other one, the ATR, we don't have ATR, but you can do it. If you get complicated, you can actually import your own custom CSV that we have documentation. So you can actually run your own indicators on here. But it's just not built in. So one thing I'll try real quick, Dan, before we go, just to see is I'd be interested on here. Okay. Someone said narrow the strangle from 25 to 10. You won't get as much premium, obviously, but that'd be interesting to see. You might end up actually.
If that doesn't do it, maybe go from 25 to 20, maybe a little more.
Yeah.
But I see the point. Let's see what they did.
Yeah. So it went down a little bit. Yeah. Let's go the other direction. Let's go 30.
Yeah. That's it. Yeah.
Well, and especially since you're taking 10% profit, you'll probably be able to get that.
Are you back to 10% profit or?
Yeah. You'll probably get, there you go. So that's more, but it's a higher drawdown. So your MAR is actually not higher.
All right. So go back. You changed that. Why did you put that profit target at 30?
It's at 30.
Oh, it is at 30.
Yeah.
Then so we went down by going to 30 wide. The MAR ratio went down.
Yeah, it went down probably because the drawdown, you might have some more drawdowns.
Wow.
Someone suggested well, this is the key someone just said too. You don't want to, the other thing you could do, it'd be interesting, and this gets crazy because you could actually put specific days if you have the Fed days, but as a proxy, what we could do, we could test it. We could say, we only want to do this Monday, Tuesday, Thursday, because there's no 0-1s, right? The weekend. But actually, because I'm not using exact DTE, we'll actually try to do that for you on Friday with the Monday one. So you could test that way, see if Wednesdays. Yeah, so that it doesn't improve it. But what's interesting, the thing that's interesting to me about that, Dan, that I actually, the more we do it with this type of test, the more I actually like the strategy, because you can see that, we're trying to get the MAR good, but like, that's a pretty good trade. I mean, from the drawdown, if you can handle the drawdown, it's a pretty good
concept. Just a concept. If you tell me a 0 day where you're selling an at the money call and put, which is screaming with extrinsic value, and you're buying your wings a day out, it makes a lot of sense. It's just getting out of Dodge quick enough. You don't want to hold it till expiration. You don't want to hold it till the end of the day.
That's right.
Did it say when you had the one last thing, when it said you got put it at the parameters where you had the is it MAR, the highest? And I'd like to see what was the average minutes in the trade when you had the MAR up pretty high, like would you have it at 6, 7?
I think I had it 5.7.
Yeah. All right. What in that period? What was the average minute? So 77 minutes in the trade.
Yeah.
So it was put on at 9:32 in the morning. You're out of there.
Exactly.
Okay, I like that. Now,
two questions. BD Bald, man, you guys look like beach bums. That's high praise. I'll take that. You look relaxed, Dan.
Relaxed, yes.
Put on now to get the weekend theta burn. So you could test that. You could test only doing it on Fridays, right? You could do that.
You could wait till Wednesday post-Fed. You could see that. And then the other question is, how about make the strangle dynamic as wide as the straddle? And so there's two ways you could do that. You could sell. You could actually sell. What I would do is basically this here. And I'm changing this from delta to strike offset. And
so he's saying turn it into a double calendar?
Exactly.
Okay.
Exactly. There's a couple different ways you could do this, but that's one of the ways you could do it.
I would think that would be worse than the MAR, but I could be wrong.
It could be. Yeah, we'll see.
Just because you're not getting that seething extrinsic.
Right. Yeah, it's not quite as, especially with the 1-2. I mean, that
I got
works.
one for you. Troy, I got one for you. You ready?
Okay.
Let's do this. Folks, this is very addicting. Let's do one more. Let's go 0 day. Let's go. The only thing I want to change is make your longs 2 day. I know it's going to be more expensive, but we want to just.
Yeah.
Now, let me just see something. If you want to go 2 day, then you might have to change the credit, but maybe not. No, leave everything alone. Let's just see if what that. Dan, you did it. As Marlon Brando says, could have been a contender. 12-1. 12-1. I get the T-shirt.
Oh man, I love it.
I knew that had to be. It had to be. All right, so we got it. Now, what's the cost goes up, but you're killing it with the MAR, right?
Yeah. Yeah. I mean, and your cost is all over the place, partly just because dynamics that are hard. So like an FOMC day, for instance, and go from there. Yeah. Someone's asking me, let me save this real quick.
What's the cost for one contract for this? So let's tell everybody what it is. So we're buying, our long is 2 days out. We're selling the 0 day. And our longs are 2 days out, but 25 up and down. Right, Troy?
Yeah.
We're putting it on at 9:32 Eastern. We're exiting when we get 30% credit, right?
Yeah.
And what is it for one lot? If you do one contract, how much capital does it cost?
Let me run it so you can test it now and just say, just take it out to. So this is at one contract. So basically your margin.
Why did the MAR go down?
Well, because MAR's a function of the allocation as well.
Oh, it is.
Yeah.
So did you have what was the allocation when we had the big MARs?
Well, the way I did it was it's 100% allocation, but it's a capped at 100 contracts. So you only ever put 100 on. So let me see. I'm trying to share this. I don't know if that worked or not. Trying to put it in the chat. Might have to get you to put this in the chat, Dan.
Easier said than done.
I know. So you could see in the private chat there.
Oh yeah.
If that worked. And if you can just share that if you see the chat. Do you see the chat, Dan?
Yes.
Okay. Yeah. If you can put it in the chat, that's the link to that test.
So what do I just copy this?
Yeah, just copy paste that. And if you're a subscriber to Option Omega, you can view that and then play around with it and do all the things you want to do with it.
And then I go in the chat. So that was the private chat that you brought up, right?
Yeah, and then you'll go in the public chat.
Where is that? I don't even. Let's see. Public.
We're doing it live, people. We're doing it live.
Let's see. You know what? If we can't, what we could do is for next Fridays, we'll or the next time we do a public one, we'll copy that.
Okay. Yeah, that's fine. We'll put it in there.
No one has to rely on me.
Yeah. No, that's fine. Well, it won't send links. That's hilarious. It'll let me talk in the chat, but it won't let me send links, which kind of makes sense, I guess. You put it in the private chat. You put it.
Oh,
back
did
in
I?
the-
Okay.
Yeah.
All right.
No
Brilliant.
worries. We'll figure it out.
All right.
Yeah, we'll put it in the description of the YouTube for everybody. So we're still working this little technology out.
How much did it cost capital per contract when you did 2 days versus 0?
Let me go back real quick and do the one. So let's say it was 3,000 to 4,000 for the 2 day. I mean, it's going to be obviously a lot less for that. $2,500. So actually not terrible. I mean, that was there it is. So yeah, about 500 to 1,500 more, depending on the day.
Which is fine if it works. I just thought by having a little more room, you're taking the pressure off those. You're not smothering the shorts with decay from the longs. But if you're going to go further out, I think you have to be more careful of the volatility environment, because if you look at this week, right? Was it yesterday or the day before? We were at 18 VIX. Now we're at 15. So I think I would definitely have parameters on there when, if I'm going to do 2 days between the long and the short, I would definitely, can you put anything in there like a certain VIX level?
Oh, sure. Yeah. So you could say, for instance, I only want to do this when
I'd say VIX 15 and under, if you can.
Okay. So max VIX 15.
Yeah. Let's see if that helps or.
It's interesting though, because you think about the last couple of years.
Yeah.
I mean, especially the last 2 years, you're missing a lot. You're missing basically all of 22 when you do that.
Oh, because when you look at the last, is this 2 years testing?
Yeah, this is back to May 22.
We've had some extended down periods, so that's why. Yeah. So in this, the volatility actually would have helped you. Because we've had extended down periods. Interesting. But see, that's what's great about it. You run this and look at the. Anyways.
Well, I'll show you real quick since it won't let me share the link. So basically, I'm gonna sign out here. You can sign up. It's $100 a month or $600 a year. But Dan has a thing where you can do, and I'll just /register/Sheridan risk management, and it takes 50% off your first year, your first 12 months. So we'll put that in the YouTube description as well for everybody. But it's just optionomega.com/register/Sheridan risk management, and you get 50% off your first year. And then Dan, I was going to say real quick, you're shy, but the thing I was talking to you about the other day, you have that subscription, which is crazy because you get all the classes, but then you also are doing you get 50% off your first year too if you do it. And I think yours ends, is it May 1st? You've got only a couple more days to do that deal where you get the subscription
just for
everything.
May 1st, we just did it a little differently here. That whereas historically with Sheridan mentoring, you'd pay for the different classes and also the different daily content. But here it's just, you get everything. So you'll get the archived library of all the classes, past classes. And then you're getting, every month we're doing 2 to 4 live classes at 2 p.m. Eastern every day. That's included. And then you get the 9:50 early morning session, which goes about an hour, which covers quite a bit. And those will be recorded. And then plus the trading group, we have some outside speakers or different ones on Friday, stuff with beginners, but anything else we do, that's included with it. So it's just something different here. It doesn't include mentoring. We're still doing mentoring. Doesn't include, if you do mentoring, we have mentoring and group mentoring, but that's a uh, that's what we have here. And I think that's, as you said, it's only good through another few days for the, you can get it for, what is it, $97 a month, Troy?
Yeah, I think it's 97, which is
97, and that's good for 1 year. That would be good for 1 year.
yeah.
If they, but get
And
the
I work with, I always tell people I work with a lot of options educators just doing a back tester, and like that's a pretty crazy deal, Dan. You're a brave cookie. Give them the
well,
people.
I don't know
that
if I don't know if I'm brave or stupid, but I think it's hopefully it gets. And the thing is with this, it's in a way, it's like you're getting like this month. It'd be almost, you know, if for people who like the word alert service, which I don't particularly like it because you're not necessarily learning it, but you're getting the best of both worlds because you're getting the teaching where it's teaching you to be a craftsman, do it yourself. But on the other hand, every 2 p.m. class, we're putting on that live trade for that thing and following it through, but also ad nauseum, going over each of the trades every day so you can see the different possibilities. So I think it's very helpful for beginners. We're going to have quite a bit of a class during the week, but you also have quite a library for beginners, short videos to get you up to speed so you can enjoy the different sessions during the day. So, well, thanks, Troy. Appreciate it. Thanks, everybody, for listening. You can see the it's like a little video game, Troy, that you can, okay, how do we get the MAR up? How do we tweak the strategy? This would be a good, my son-in-law likes to play games on a Friday night. Could invite some people over. We could do the, let's get a strategy to get the MAR up to 10 or something.
Oh, yeah.
It'd be like 4 a.m. or something.
Yeah, that's right. And and I've done it.
Someone's asking, and I've done it. Yeah.
Send us the link. Yeah, we'll put it in the YouTube description. For some reason, the chat stuff's not working for us. But then, you can play the recording, just YouTube Live. You know, Sheridan Risk Management under the live channel. It should be ready almost as soon as we're done here. So,
all right. Thanks, Troy. Thanks, everybody. Appreciate it.
Thanks, Dan. You guys have a good weekend. We'll talk to you soon.
Bye-bye. Thanks.